you are new to the stock market and you're scrolling through TikTok and it's video after video of panic, panic, a recession is coming. Warren Buffett just sold a humongous stake of his Apple shares. Nvidia's new chip is going to be delayed by 3 months. A recession, oh no, oh no. Relax. I was scrolling through threads earlier and post after post was, I'm a new investor, my portfolio is down, what should I do? I don't know what to do. Relax. If you are new to the stock market, you are probably here because of social media, right? A lot of content creators are making videos, markets are at all-time highs, I'm making so much. You see these videos and you say, I'd like to make some money, I'll start investing. Then markets hit all-time highs, a couple of bad earnings reports come out, unemployment goes up, you're a first-time investor, and all of a sudden, markets start pulling back. That can be really scary. And if it wasn't bad enough, we're getting two kinds of videos being made right now. One from inexperienced investors screaming that you should panic and sell everything. And two, which is on par with how bad they both are, experienced investors who don't care about your portfolio at all. They don't give a shit about you or your stocks or your money. They understand one thing: fear sells, which means that their video telling you to panic, oh no, is gonna go viral. Which means, of course, that this video probably won't go viral, but take it from me, someone who's been investing for over 20 years, you're going to be fine. Remember, you're not investing for tomorrow or next month or even next year. You're buying these stocks and hopefully high quality ones or index funds, ETFs, for the next 10, 20, or 30 years. People love to show charts of the lost decade and the 2008 recession and say, look how long it took for you to get your money back. But that's not entirely true. Let me show you. Yes, this looks bad. A lot of people call this the lost decade from 2000 to 2010, where it took about 10 years for the markets to basically do a whole lot of nothing. But I'm going to tell you why that doesn't really matter, especially if you're an early or young investor. If you started investing when you were 20, 30, or even 40, it's very likely that you're not making a one-time investment, right? You're not just going, I'll buy 100 shares and that's it. You're going to average in. It's called dollar cost averaging. So you buy when markets are at all-time highs, you buy when markets are down, you buy everywhere in between, and it all averages out over a 30-year period. Being heavily invested in stocks only becomes worrisome when you're in your late 50s, because if all you have is stocks and the markets crash and it takes 10 years to get back to where you were, it means that maybe you might have a harder time retiring. But I'm begging you, please don't fall for this clickbait fear. Yes, it's scary. Yes, your portfolio value might drop in the short term. But we have a 100% recovery rate when it comes to recessions. And I know everyone says, but what about this time? This time feels different. What if this time is different? I promise you, if this time is different, we're going to have way bigger problems on our hand than our stock portfolio. You might have heard the expression, scared money don't make money. Well, that's especially true for recessions. Recessions, down markets, can be the buying opportunity of a lifetime. And like I said, I know it's scary when you've put your limited amount of money into the stock market and you see it go down short term. But I promise you, if you look back over the years at every other recession, we're way higher now than we were. What you should do is consider coming up with a wish list of investments that you want to buy. Now, don't worry about trying to time the markets and getting the absolute lowest price. It doesn't really matter. It's impossible. It'll drive you crazy. Just start a little bit at a time. Maybe dollar cost average into some stocks that you've always wanted, but you thought, it's just too expensive. But selling during a downturn is a huge mistake, because these companies, high quality ones, have a strong track record, good fundamentals, and usually are the first to lead the charge into the recovery. Don't lock in a loss on something that you planned on holding for 30 years because you got scared. All you got to do is smash that follow, take a deep breath, and relax. You're investing for 30 years. Don't worry about it. You're going to be fine.